Okay, so uh, you know how sometimes you hear a financial term and it sounds like it came straight out of like a sci-fi movie?
Right.
Yeah, like stock split. I mean, doesn't that sound kind of futuristic?
Mm-hmm. It kind of does.
But anyway, it's actually a pretty common thing that happens in the financial world. So
Yeah.
in this deep dive, we're going to try to demystify stock splits a little bit and help you understand why companies do them and what it all means for investors.
Yeah. You know what's funny about these stock splits?
Well,
They always generate so much buzz, like when a company announces one, but at the end of the day, they're kind of like just rearranging the furniture. You know what I mean? Like you're not actually changing the value of the company itself. You're just changing like how that value is sort of divided up.
So you're saying it's not like some magic wand that like instantly makes my investment double or something?
Right. Yeah, exactly. It's
Yeah.
more like, if you had a 10 rupee bill
Okay.
and you exchanged it for 5 rupee bills,
Okay.
you still have 10 rupees. It's
Sure.
just, in a different form.
Oh, okay. I got it. So it's not changing the total value, just like breaking it down into smaller pieces.
Exactly.
Yeah, that makes sense.
Yeah.
But then that begs the question, like, why would a company even bother
Right.
doing all this financial furniture, rearranging? What's the point?
Well, one of the biggest reasons is to make the stock more affordable for, everyday investors.
Okay.
So if the price per share is lower, that can be really appealing to people who are, just starting out, or maybe they have a smaller budget.
So it's kind of like if a store wanted to attract more customers, they might start offering like smaller, more affordable packages of their product.
Yeah, that's a great analogy. And when a stock becomes more accessible, like that, it often leads to, more people buying and selling it. So there's more trading activity.
Mhm.
And that can actually be beneficial for the company and for the investors.
Okay. But I'm also thinking like, wouldn't some companies want to keep their stock price high
Mm-hmm.
as kind of like a sign of exclusivity? Like
Yeah.
you got to be in the club to, afford to buy in.
That's an interesting point. And there are definitely companies who think that way. A high stock price can kind of be seen as a status symbol,
Right.
but it can also be a barrier for some investors. And some companies decide, you know what, it's more important for us to attract a wider range of investors than to maintain that exclusivity.
So there's some strategy involved here. It's not just about being the nice guy in the stock market.
Oh, definitely, yeah. Companies are always thinking about their image and their future, and stock splits can be a way of signaling that the company is confident in its growth potential. It's like they're saying, hey, we're doing well and we expect to keep growing, so we're making it easier for everyone to be a part of our success.
It's kind of like they're putting out the welcome mat for new investors.
Exactly.
I see. Now, I know we often hear about stock splits in the same breath as bonus issues.
Mm-hmm.
Are those basically the same thing?
Well, they both result in investors ending up with more shares.
Okay.
But there's a key difference. A bonus issue is kind of like getting extra slices of pizza for free. So the size of each slice stays the same. You're just getting more of them. With a stock split, though, we're actually slicing the pizza into smaller pieces.
Okay.
We're changing the face value of each share.
Got it.
Yeah.
So bonus issue is about getting more and stock split is about dividing things differently.
Exactly.
Okay. Speaking of dividing things up, are there specific dates or timelines that I need to be aware of when it comes to stock splits?
Absolutely. Just like with dividends or bonus issues, there are key dates to keep in mind, like the announcement date, when the company announces the split. Then there's the record date, which is the date they use to determine which shareholders are eligible to get those new shares.
Okay.
And then there's the exit, which is the
Okay.
date you need to own the stock by in order to be eligible.
So it's important to like mark those dates on your calendar just like you would for other corporate action.
Exactly, yeah.
So we've learned a lot about stock splits. It seems like a pretty straightforward concept.
Right.
But one question that keeps popping into my head is if a stock split doesn't actually change the fundamental value of a company, are there any other like more strategic reasons why a company might do one?
That's a great question, and it's something that analysts and investors are always trying to figure out. Like you said, increasing accessibility is a big factor.
Right.
But companies might also use stock splits as a way to attract more attention from analysts,
Okay.
which can lead to more research and coverage of the stock, and that can be good for the company's visibility. And some people even speculate that a lower stock price might make a company more attractive for inclusion in certain stock indices.
Oh, interesting.
Yeah.
So there might be more to this whole stock split thing than meets the eye.
Right. Yeah, it's not just about cutting things into smaller pieces. It could be part of a bigger strategic game that the company is playing.
Something to think about for sure.
Definitely.
Well, this has been a really insightful deep dive into the world of stock splits.
Yeah.
For our listeners out there, keep this in mind. the next time you hear about a company doing a stock split, there might be more going on behind the scenes than you realize.
Great point.